BlackRock might be preparing to launch an XRP ETF. At least, that is the view of ETF expert Nate Geraci. Following the official dismissal of the Ripple lawsuit appeal, Geraci believes the timing could not be better. As president of the ETF Store, he points out that legal clarity was likely the main thing holding back such a move. His projection is that BlackRock would use its iShares platform, which already hosts a range of ETF products, to bring an XRP offering to the market. This perspective is not shared by everyone. Bloomberg ETF analyst Eric Balchunas expressed out, saying, "I think they're happy with the two." By the two, he is referring to BlackRock's Bitcoin and Ethereum ETFs. His reasoning is that expanding beyond those top two cryptocurrencies might lead to diminishing returns. Still, Balchunas admitted that his view is based more on instinct than hard data. The Ripple case, which started in December 2020, has now been closed with a joint dismissal of all remaining appeals. The ruling confirms that XRP is not considered a security in retail transactions. This is an important point, not just for Ripple, but for the broader crypto industry. Without the constant uncertainty of litigation, U.S. exchanges and financial institutions have more freedom to list and integrate XRP into their offerings. Ripple has wasted no time moving forward. Just before the dismissal filing, the company announced the $200 million acquisition of Rail, a move designed to strengthen stablecoin infrastructure for its RL-USD project. This signals a clear shift from defense to expansion now that the legal battle with the U.S. Securities and Exchange Commission is over. Markets have reacted strongly. In the 24 hours after the lawsuit's conclusion, XRP rose more than 13%, far outpacing the 3.75% gain seen in the broader crypto market. South Korean exchanges saw a staggering 1,211% jump in XRP trading volume, according to CoinMarketCap. This shows not only renewed confidence, but also how quickly market sentiment can shift when a major source of uncertainty is removed. The derivatives market has also seen unusual activity. Traders on Deribit purchased over 100,000 call and put contracts at $3.20 and $3.10 strike prices, with premiums totaling $416,000. This kind of positioning suggests that traders expect higher volatility in the near future. Net inflows into XRP exceeded $42 million, and at one point, the price touched $3.32, boosting its total market value to $22 billion. Another sign of shifting sentiment comes from Polymarket, where the odds of an XRP ETF approval jumped back up to 88%. This was a significant recovery from a dip to around 65%, which happened after SEC Commissioner Caroline Crenshaw voted against certain crypto-related measures. Analysts like Balchunas were quick to note that Crenshaw's vote should not be overinterpreted. She has consistently opposed all crypto ETFs and is often outvoted. The idea of a BlackRock XRP ETF has strategic appeal. Bitcoin and Ethereum ETFs have already established themselves, but expanding beyond those two would diversify BlackRock's crypto portfolio. It could also appeal to institutional investors who want broader exposure to digital assets without directly holding them. From a market positioning standpoint, BlackRock could be the firm best placed to make such a move. However, there is a practical consideration. Would investor demand justify it? Balchunas' point about diminishing returns is worth noting. While XRP is one of the largest cryptocurrencies by market capitalization, it does not have the same mainstream recognition as Bitcoin or Ethereum. That said, the recent surge in volume and price following the lawsuit's resolution could indicate that the appetite for XRP-related products is larger than many assume. From a regulatory standpoint, the timing is favorable. With the SEC case closed, the main legal barrier is gone. While crypto regulation in the United States is still evolving, the decision in Ripple's case gives a clear precedent for how XRP should be treated in retail transactions. For an asset manager like BlackRock, that kind of legal certainty is a prerequisite for launching a product that could attract billions in institutional capital. In summary, there is now a strong combination of market momentum, legal clarity, and institutional readiness. Whether or not BlackRock moves forward with an XRP ETF immediately, the conditions for such a product have never been better. As Nate Geraci suggests, the asset manager may simply have been waiting for this exact moment. And if they do act, it could signal a new phase in the growth of crypto ETFs, one where Bitcoin and Ethereum are no longer the only options for mainstream investors. If XRP's recent performance is any indication, the market is more than ready to test that theory.